Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I'm your host, Chris Coney. Now on this Sunday edition of the Cryptoverse, we turn to bitcoin.com for the news. This is an article by Trevor Hill, and it's entitled Liftoff: How a Traditional ETF Can Send Bitcoin to the Moon. I've heard a lot about this recently, so I thought it was about time to bring it to your attention. Now, interestingly, in the article, the cover image is of the space shuttle, which is now a retired vehicle, but that's just by the way. For those of you into space travel. So here we go. The emergence of Bitcoin-based ETFs, which stands for Exchange Traded Funds. Okay, so with the emergence of Bitcoin-based ETFs, chatter from observers suggests that the activities coming from these investment funds could double the Bitcoin price, if not more. Now, the most high profile of these funds is the Winklevoss ETF, which has been waiting for SEC approval. And now, the Winklevosses, they're famous for, or from among many things, being some of the original investors of Facebook. And when it says it's waiting for SEC approval, that's the Securities and Exchange Commission, which is an American institution. Now, while the possibility for rejecting still exists, the ETF is expected to get approval in the coming months. Coming months? Oh my goodness, this stuff takes a long time. Either way, the SEC must make a ruling by March of 2017. Oh geez. So it could be 6 months, potentially. Now, some believe the implementation of a Bitcoin-oriented investment vehicle, like an ETF, could as much as double the price of the cryptocurrency. This is due in part to the belief that widely traded stocks of Bitcoin will further legitimize the currency by offering different avenues for people to invest in, as well as making it less intimidating and obscure to newcomers. Now, I'm a little bit uncomfortable about this because an ETF, it's a fund, it's a basket of things that's traded on the markets. But it violates one of the core principles of crypto, which is maintaining sovereignty over your own wealth, right? So we'll get more into that in a minute. Let's just see what else the article's got to say before we do that. So it says, however, there is another reason, one that appeals more to the mainstream outlets. The history of commodity-based ETFs such as gold, considered comparable to Bitcoin as an investment vehicle, shows that once an ETF for a commodity is launched, that asset's value increases significantly due to buying demand from the fund. Yes, because there's a whole bunch of investors that don't know a thing about gold or a thing about Bitcoin, and they just want to invest their money somewhere to get some kind of return. And that's what these investment funds do for them. They do all the research and da-da-da. So that is exactly what happened in the early to mid 2000s when ETFs for commodities such as gold, silver, oil, and natural gas brought huge value increases to their respective assets. Now, applying that history to Bitcoin, it is plausible for the launch of an ETF to provide an opportunity for a moonshot moment in regards to the cryptocurrency's price. After taking a deeper look at the historical claim, there seems to be some validity behind it. Take gold, for example. Before the introduction of the EFT investment vehicle, it had been stuck in a price range of around $300 to $400 for the previous 15 years. And that's a long time. And it also provides some significant credibility to the belief that gold's price surge was due to the ETF. Now, this is especially true if you consider the fact that only 2 years after the launch of SPDR Gold Trust, the price of gold reached $600. After another 2 years, gold rose to $900. Wow. pretty rapid. Now the same trend can be seen with silver as well, having shot up from $8 in August of 2005 to over $14 by March of 2006. Wow, that's less than a year. Then 2 years later, silver was trading at over $20. It too had been limited to a certain price range for 15 years prior to its EFT, but this soon changed after its introduction. And these price increases were likely the result of new, previously unseen capital flowing into the commodities through their investment vehicles. Thus, history suggests that a successful Bitcoin ETF could actually expand the currency's market, bringing people into the Bitcoin economy who previously had never been a part of it. So get your moon boots ready, we could be in for a ride of a lifetime. Do you think Bitcoin's ETFs will create a watershed moment for the currency? Let us know in the comments below. And that's the end of the article. Yes, I'll go back to my original point because the article didn't debunk it, which is that if you are investing in an ETF, you are surrendering custody of that Bitcoin to whoever's managing the fund, right? So their job is to take all their clients' money and then split it up and invest it in vehicles and investment vehicles and commodities and stocks and assets and so on that they've researched, and then they've done a risk profile on them and so on. So that's kind of what, mutual funds and stuff like that do, investment funds, hedge funds, etc. And they get paid a fee for that, right? They get a percentage of however much money they manage. Just as a brief aside, one of the criticisms that Robert Kiyosaki espouses about these managed funds is that they take a fee no matter what. So they typically take a percentage of how much money you have invested on an annual basis. So say if I invest £100,000 in one of these funds, the fee might be, 2% per year, say. So every year, the fund managers are going to take £2,000 out of my investment as a fee. So at the end of the first year, I'll have £98,000 left. Now, that's worst case scenario, of course, where that doesn't include the calculation for any gains in the investments themselves. The goal and the reason you employ these fund managers is so that they invest that £100,000 of mine in the year, and by the end of the year, it's at least grown by 2%, because if it's grown by 2%, I'm breaking even because I've got enough to pay the fee for the management and I haven't lost anything. Now, that's still not very good because you want to be able to pay the fee and get a return. So if by the end of the year it's grown by, say, 10%, then my £100,000 is worth 110,000, 2,000 fee for the broker or whatever you want to call them, and there we go. Now, that's fine. And oftentimes these funds also get a commission. So if they make 10% gains on my money, they'll take a percentage of the profits as well, right? Brilliant. So the criticism that Robert Kiyosaki has about these funds is that if they lose money, they still get the fee, but they don't take a hit. So if by the end of the year, my £100,000 is worth 80,000 because of the investments have gone down in value, the investment fund is still due the fee for their management service, but the £20,000 loss, that's all on me. And that's why Robert Kiyosaki says it seems a bit unfair for them to take a fee for management, that's fine, but for them to take a commission on any gains, but not have any consequences for the losses, that's what his bugbear is. So that's point number one. The second point is the sovereignty thing. And it is a challenge because even I think I mentioned this yesterday on the Cryptoverse, even I put some Bitcoin into Magna, which is effectively surrendering custody of my Bitcoin to Magna in order to get a percentage return. And if you don't know, Magna is a British company who pay something like, I think it's 2.35% per year interest on Bitcoin that's deposited with them because they then lend it out to traders. Now, if they lost that money, of course, they have it in their wallet that they control. I can request a withdrawal at any time, but it's still using the bank model where they have control of it. The downside is at the moment, I don't know of any way that I can retain the custody of my funds and gain interest. Well, actually, that's not true. Steam does that. If you use Steam and you hold Steam dollars, they do pay interest and you do retain full custody of the private key for that money. So, that's it's actually not true. And that was based on the original BitUSD idea. And I think that's now actually working. I do actually receive interest on my Steam-backed dollars. Well, there's an enormous comment here. Let me read it and then we'll close. So, if there is a Bitcoin ETF, it will likely be followed by an Ethereum ETF and so on, with stock investors on the traditional markets diversifying their game. Digital assets are a new class of asset, basically. This means they achieve a new dimension of diversification, which once investment consultants for 401k portfolios and mutual funds realize this, they will begin offering digital assets like Bitcoin as an alternative method of diversification. Should be huge. I actually wonder how Bitcoin itself will cope with that much capital flowing into it, whether there will be a problem with the number of transactions hitting the network and so on. Quite likely it won't cope, and the transactions fees will be the only way for the system to normalize, in which case Bitcoin becomes a system for reserve funds, not something which could handle micropayments. Because the investment capital from the stock exchanges can handle high transaction fees, but have no interest in micropayments. Yes. So it would lose usefulness for what it is intended for, but Wall Street doesn't really care about that in the short term. And that's the end of the comment. Now, there's a few, I'll just make one comment about that. It says, so it would lose usefulness for what it was intended for. That's the bit I've got issue with. What it was intended for, well, that doesn't matter what it was intended for. The Bitcoin, in the Bitcoin white paper that Satoshi wrote, the Bitcoin we have today is nothing like it. Well, the principles are there, but it's changed significantly since then. So I don't think hardly anything is exactly what it was when it was originally conceived in terms of its intention. So the purpose of something changes. And the beauty of Bitcoin is that what it's going to be used for, its purpose will change based on how people use it. So I've had a lot of people talk about Bitcoin becoming the reserve currency of the crypto world because it's got the most security, the most market cap, and the most mining power, and so on. And it's slower than a lot of blockchains, so that kind of means it's not suitable for micropayments and quick transactions. However, that's fine. If that serves that need, if that serves that purpose, then we can build things on top of it to adhere to other requirements. So that's going to do it for today's edition of the Cryptoverse. Thank you very much for listening today. Now, I would appreciate it if you would go to cryptoversity.com and subscribe to the podcast on any of your favorite channels. And even better, I would like you to support the Cryptoverse. So you can do that in 3 different ways. Number 1, you can send us a Bitcoin tip to the address on that page. You can buy a course from Cryptoversity if you want a more structured way of learning about Bitcoin, cryptocurrencies, and blockchains. And alternatively, a brand new way you can support the Cryptoverse is by going to the Cryptoversity merchandise store, where there's a range of physical products that have the Cryptoversity branding on them. And I'm going to work on expanding that, putting new designs out there, putting new products out there. So yeah, go ahead, check that out, buy yourself a t-shirt or something, and that'll help support the Cryptoverse and so help to support the mission of Cryptoversity. All right, that's all for today. I will be back tomorrow for the next episode of the Cryptoverse. Until then, it's me, Chris Coney, saying bye for now.